Good morning. Thank you for having me. I think the last point that you mentioned, the reserves, the targeting of the central bank's reserves, I think is the most important piece of news here. I think if you think about the Russian ruble, and a lot of the Russian local assets, the fact that they had this very significant amount of reserves, upwards of 600 billion when you include the gold as well, I think was the main and first line of defense against Russian local assets. I think with, targeting of that, freezing of those reserve assets, I think it becomes very hard for Russia to essentially, defend the ruble from these sorts of, the kind of pressure that you are seeing. So I think that, we should expect the ruble to trade pretty weakly, and it's no surprise the kind of volatility that you are seeing in markets today.
Looking at the volatility that we're seeing in markets, you're looking at Russian assets, wider EM, and global markets, how does the volatility we're seeing now compare to historical moments like this, like the annexation of Crimea in 2014?
I mean, if you think about the annexation of Crimea in 2014 and the whole 2014 to 2015 period, where towards the end of the year you also had escalation of violence in the Donbass, big fall in oil prices, there was a decumulation of Russia's reserves of the order of upwards of $100 billion. So that just gives you a sense of the kind of and there were very significant interventions on a day-by-day basis in that period. That gives you one sense of the kind of role that reserves play in stabilizing currencies. And even at that time, you saw a big sell-off in the ruble. And so when you fast forward today, if that main sort of defense mechanism is completely inaccessible or not very accessible to Russian authorities, it's going to mean much more significant pain and volatility in the local assets. And I think that is what you're seeing. I think those assets, apart from the sort of technical stance of how people transact in them, are increasingly going to become uninvestable for a lot of global investors.
Well, on that point, I was just going to ask, for investors, EM investors watching this program, are Russian assets investable at this point?
I think at this point it is very hard with especially I'd say with the range of sanctions being put. We still await a lot of details, but it's very hard to imagine that people will be looking for fresh positions there. I think the pressure is likely to be intense and it is likely to be sustained. I think when it comes to the broader emerging market landscape, I think that is the place where I think there may obviously there's going to be a big risk premium being put into all assets. We're seeing that across global markets today as we sort of digest the news over the weekend, the escalation in violence, the new sanctions. But, further out, we think the market will start to have to differentiate between assets that are closest to Russia and where there is, some legitimate risk premium, Russian assets first and foremost. But when you go broader across the emerging market landscape, some of the assets that are swept away in this volatility may actually become reasonable opportunities further down the line. But I think that is still a few days away.
Which EM assets are most insulated from what's happening between Ukraine and Russia?
I would say that when you think about places that are A, commodity producers, so they sort of benefit from the tailwind of the kind of, increase in commodity prices that we are seeing, and B, are sort of far away from the theater of conflict, if you like, and the theater of sort of increased geopolitical stress, those are probably the ones that are most likely to remain somewhat insulated over the medium term, not today, not this week, but over the medium term. And I think that is, obviously places in Latin America is an important group of them. A lot of them are commodity producers. They will still have the negative impact of the higher oil prices and what that does to their domestic inflation. But on the whole, they should stay somewhat insulated from the relative to the others in Central Eastern Europe. And then I would say there's the sort of GCC area, the Gulf area, the Middle East. Major commodity and energy producers, somewhat far away from that theater of conflict. And I think that is also another area that may have some degree of resilience. We already saw that a little bit last week through this volatility.